It's Thursday, June 24th, 2021, and today we're talking about Q4 tells investors to wait for their IPO. AlayaCare brings home $225 million for home care. Portage gets ready to SPAC, and Golden Ventures doubles down with two new funds. All right, let's get started. First, Q4 tells investors to wait for their IPO. Q4 is one of my favorite companies in the whole ecosystem, and we've been super lucky to have Donna, the COO, speak at TechTO in 2020, and Daryl, the CEO, speak with our community in 2015. Here's what Daryl was hoping for back then.
And what Q4 is that we are a SaaS platform for investor relations for public companies. The business is almost entirely US-based. We have about 30% of the S&P 500, about 30% of the Fortune 500. And we are about 530 clients or so.
Wow, amazing. And 530 clients. At that time, they were raising their Series B, Alex. You think that Series B worked out?
I think so. I'd have liked to have some money in that company at that point.
All right, so what's the news today?
So on Monday, Q4 said it postponed its planned IPO. It's going to raise $150 million on the TSX.
Okay, and we heard a little bit from Daryl what Q4 does, but why don't you try it in your own words?
So Q4 provides software that enables public companies to manage their investor relations. So if you're public, you have all types of investors. You have institutional, you have retail, and you have a bunch of legal obligations, and you have a bunch of strategic obligations and strategic rationale and how you deal with your investors. So basically Q4 does a few things. One is it takes over your investor relationship page on your website. So it basically provides a solution where you can put your financials, you put your presentations, and it has a best in practice part of the website. So I don't know if you've ever been to like Amazon and hit investor relationships. That's what they do. Second thing is they provided tools to do webcasts, earning calls, and other investor relationship communications. Then, which is more interesting to me than the other two, because that's pretty cool. But then they actually have tools that help you analyze your capital flows and understand who your investors is. And you go, okay, why do I care who my investors are? Well, these institutional investors invest in certain thesis, and you want to know that you're aligned with them, because it can cause problems for management team if you have an activist investor that might be very aggressive. You might want to know if when I used to do investment banking, and when I did M&A deals, one of the things we would look at is what are institutional investor base in the two companies, and will that cause problems to their share price because one of the investors who are acquired will not like the deal for some reason. So very powerful. It takes care of a major headache for public companies.
Got it. And now in that quote, that clip that we just saw, Daryl said they had 530 clients in 2015. What does that look like today in 2021?
A few more. Maybe you'd even say exponentially more. They have 2,400, including names like Netflix, McDonald's, Square, Shopify. So they seem to be doing okay.
What else can we learn from the prospectus that they filed for this IPO?
So 2020 revenue was $40.4 million, which was up 80% over the previous year. I didn't go through the prospectus in big detail, but I always like looking at how much equity they've raised to date. So they've raised 65 million, roughly 65 million USD. Some of it's Canadian rounds, some are US rounds, so it makes it hard to get a real number. Unless I go back and look at exchange rate in the days of. They have about 550 employees. So this is a company that seems to be quite capital efficient, growing nicely, and has a customer base that everyone would love to have.
Okay, so hang on a second, because usually the news that we would cover here is that the IPO is happening, the IPO happened, it's had a big bump, but we're covering that the IPO was paused. So what's going on here?
There's been no, so it's interesting because they actually increased, I think, the size of the IPO the week before. The markets have been generally good and maybe a bit choppy for some companies that aren't exciting or aren't performing like they promised they would. So everything looked like this IPO is going forward. The company hasn't said why they paused it. My reading into tea leaves is there's some type of big transaction about to happen. Either they're about to acquire a company, they're about to get acquired, or maybe someone's come in at a crazy valuation that's better in the public markets. So usually when I see a company pause like for this, the good reason there's some type of transaction happening. The other thing is maybe something happened, and again, this is pure speculation, maybe, and this usually would have been leaked by now. Maybe there's something wrong with their financials. Like that's what happened to Roblox. They got paused a couple of times because they didn't like how the SEC didn't like how they were representing their earnings. But that was also much more complex where kids are paying upfront for a Robux. Here, I think this is more SaaS. I don't think you'd have any issues with the filing. So my guess is there's some transaction happening.
That's right. And
we
we know there's strong financial leadership there. I don't think that's what's going on. Okay. So
and they might know how to deal with investors too. So I don't know, like my gut feel there.
Maybe they did all the research and they said pausing your IPO is #1 thing you can do to drum up investor interest. I don't know. Let's do some more wild. It worked for Roblox. Let's do some more wild speculation. If you think there's a material transaction coming down the pipeline, what do you think something like that could be?
Oh God. If you this I haven't thought about, but like it could be they're getting acquired. Like, this happens. You've seen this quite often where companies about to go public, and the day before they go public, someone puts an offer to acquire them. Like who's a big SaaS company that deals with Fortune 500 companies? Don't think this feels right, but Salesforce could be acquiring them, right? They've bought Slack. They want to earn more. They want to earn more share of the wallet. Actually, maybe Microsoft. That feels less likely.
Yeah, one of the exchanges could buy them too. That'd be fun, also.
That'd be interesting. I the only worry I'd have from a strategic perspective, if let's say TSX buys you, does that mean does New York Stock Exchange encourage their companies not to use a TSX product?
Yeah, the other way I can see it is, like you mentioned, some of the tools that they're rolling out, video communications, audio communications. This could be like one of the ultimate video conferencing add-ons as well, right?
Yeah, actually, who I think would be interesting would be Bloomberg.
Oh, that's a great one. I love it. Yeah. All right. So check back here. That ends the wild speculation from me and Alex today, but I think there's some interesting stuff in there.
Do we get a prize if one of these are right?
Absolutely. We get a prize. We get 1 share of Q4 when it goes public on Wealthsimple Trade. That's the prize. That's what I was looking forward to do. So if you're part of the TechTO community, why is this interesting news to you to have the IPO paused here?
So first of all, let's say who does this directly impact? I don't know if they're part of the TechTO community. The VC firm 10 Coves owns about 25%. Daryl Heaps, who's presented, owns roughly 5%. So if the company is paused and does not get liquid anytime soon, they've lost a bit of ability. They weren't going to sell all their stake right away, but they've lost liquidity on a substantial wealth. You're talking about roughly 30 to 35 million because I think the company's supposed to go public at 700 million before pop. For Daryl. Also, the banks lose. CIBC, National Bank, Credit Suisse, they probably stood to make 5 to 7 million in fees combined. So some bankers, didn't go to Morton's last night. I can't go to
the Morton's patio, you mean?
The Morton's patio. Sorry, yes. For the general public, the question comes to why was IPO paused? If this isn't really an alternative transaction like we're speculating, it relatively means nothing. Maybe it means if it's a financing round, it might mean that hey, you're now better off staying private than going public. If it's due to market conditions, this might mean the IPO window's shutting. And if it's a startup, why do I care about that? Well, your valuations are based off comparables of public companies, hypothetically. And so one reason we've seen valuations increase so much is because the public companies are worth so much. So if they start falling in price, in 6 to 12 or 18 months, you'll start seeing earlier stage rounds fall in value. Either way, this is a great functional, SaaS business, and it's not sexy. Who wants to do investor relationships? But it's grown significantly in size. It capitalizes on several trends. We talk about an API renaissance, or how APIs. This is sort of like an API type company, and there's a trend there where you see, Q4, powers your investor relationship page. Most job pages now are powered by someone else's site. So there's, again, startups don't always have to be doing something on trend and that looks like big. There's lots of big markets hidden there, even on other people's sites. If I'm founder, I'm like, okay, how does this inspire me to look at something differently? What part of a website or company, what part of that's something every company but it's not important to them? Or maybe I should be powering that.
I love it. And if you love keeping up to date on the people like Daryl and Donna and Ryan, or the companies like Q4 that are shaping the Canadian tech scene, you need to subscribe to the TechTO newsletter. Alex, what can subscribers expect in tomorrow's edition?
Tomorrow's edition will have a few good reads that if you don't want to go through all the blogs, Twitter, and everything to find some information, either stay up on the news or just get insightful reads, you have to join us because we'll have about 5 of each tomorrow. So like you do the reading for us, is that right? Yes, I do the reading. Well, I want the notes also, Alex. Can we make that happen? That's for maybe we should have a premium insider. There you go. That's for the insiders in Slack. Yeah. You got questions. Alex has the answers in Slack. All right, next up.
AlayaCare brings home $225 million for home care. What's the news here, Alex?
So Montreal-based AlayaCare closed a $225 million round. This round was led by Al Gore's Generation Investments Management. Nice name that just slips off the tip of your tongue. They had participation from Class Capital, Inovia, Caisse de Depot, and Placement de Quebec and Investment Quebec, so Quebec Inc. What was interesting here, they actually disclosed that $150 million was primary, so used by the company, and $75 million was, taking secondary for early investors, employees, some cashed out. So interesting round, some money taken off the table. The valuation of the company, it wasn't clear to me, but I figured it's got to be 9 figures-ish, high 9 figures.
So tell us a little bit more about what AlayaCare does.
So again, another not sexy industry, but it was actually a hot industry a while back. AlayaCare basically is the platform for home and community care market providers. So if you run a home care service, so basically AlayaCare can do everything for you. They help you deliver better, their platform, the quote unquote, helps you deliver better care, optimize operations, grow your business, and retain employees. So what does that mean? It helps you with anything from optimizing the schedule of your employees to, managing electronic referral intake, doing assessments of patients, scheduling, dispatching, basically.
It's the whole platform.
It's a whole platform. You can run your business off it. Like I said, it's an operating system for, a home care provider.
And do we have a sense of how big AlayaCare is?
So it looks like they did about 50 million revenues last year. They've been growing organically and through acquisitions. They have 525 plus customers. They've raised about 230 million USD, and they have about 465 employees. So decent size.
Okay, so those are good numbers. But do numbers like that guarantee a kind of monster round like this?
Depends how fast you're growing. In this market, yes, but I think the company had a few things going for them. First of all, they proved to be resilient and actually benefit from COVID. So at the beginning of COVID, I guess they charged based upon number of transactions, and no one was visiting any home care. Like the market saw their customers saw business drop significantly in the first few months, but then rebound significantly to a faster pace than before, because who wanted to send their parents to a government-run old care home? Everyone would rather stay home for home care. So benefit from COVID in that way. It's interesting. They've got strong market share in Canada and Australia, but relatively small market share in the US, which is a highly fragmented market. So if you look at this is still a growth story. They're starting to really grow in the States. The States they've 7 times their revenue in 2 years and accounts for 70% of new business. So we're going well. We're 50 million base. We dominate Australia. We dominate Canada, but there's this market called the United States that we can penetrate. And they also mentioned they're preparing to go public in about 12 to 18 months.
Amazing. So if you are part of the TechTO community, why do you care about this particular deal?
Well, I think there's a few counterintuitive things here. First, when you talk to most founders or investors, they say, go tackle the US market to start with. And here's another Canadian company that tackled another market really before the States to provide a base to go attack the States. So it's another way to think about growing your business. And you can look at a couple other companies. Sensible penetrated the UK before going to the US. Wattpad has a large Asian presence and monetization of the Asian audience before the States. So big counterintuitive. Second of all, while there's a record number of IPOs this past 18 months, and Q4 was about to go public, it's not as easy as people think. It does take time to prepare. So if you want to do the traditional IPO route, it does take getting the right board, the right systems in place. Maybe you hire Q4 for your investor relationship portal. But they're thinking about IPO and they're planning 12 to 18 months ahead of time. And this also goes back why RTOs and SPACs have taken off, because it's much easier to go public that way. Finally, AlayaCare is succeeding in a notoriously difficult market. A few years ago, a bunch of companies raised $10 to $30 million to tackle this market. I haven't heard anything from it, so it sounds like they floundered. And AlayaCare is executing, so that's awesome.
Yeah, you knew someone was going to win, which is fantastic. Let's talk about some live streams. Next week on our Canadian Rocket Ship podcast, we are going to be joined by Martin Basiri, the co-founder and CEO of ApplyBoard. Just last week, Apply Board raised a $375 million round at a $4 billion valuation. Huge win for the Canadian tech ecosystem. And for the Apply Board team, you got to listen to the live podcast recording on Tuesday to find out how you can join this Canadian rocket ship, or listen later on the TechTO Canadian Rocket Ship podcast. Then on July 9th, Alex is back with another Canadian company that you should be watching. It's Relay Financial. Co-founder and CEO Joseph West will be joined by Carrie Goman, partner at Bain Capital Ventures, to talk about their journey to the recent Series A and expanding into that US market. Just like you said, Alex, you got to head over to techto.org to get access to all our upcoming streams. Next, Portage gets ready to SPAC. Alex, are SPACs still hot? I thought we've moved on. I thought we're in a post-SPAC world.
So do I. So this actually makes this news kind of interesting. So technically, it's Sagard Holdings, which is, I guess, the parent company of Portage. And is alternate investment arm of Power Corporation and manager of Portage Ventures, is announced they're launching a SPAC called Portage FinTech Acquisition. And believe it or not, they're focused on a fintech acquisition.
So should we expect them to have like an NFT coming out next year, or maybe a big Dogecoin holding in 2 years? Feels like they're a little bit behind on this one. No,
I don't know. That's a question for Sagard. This SPAC here, it's also not a huge initial IPO. It's $200 million. They're doing it via the NASDAQ. They got Portage Ventures CEO Adam Fileski and Ajay Chowdhury, a partner at Sagard Holdings, are leading this. It's 20 million shares at $10 per unit. So and they're looking to what are they looking to do? They're looking to acquire a fintech company, but they've also, if you read the language, it could be, they say we'll focus on fintech anywhere in the world, preferably SME finance, insurance, payments, information service, or fintech infrastructure, but they reserve the right to invest in anything anywhere.
Right. And just for people who are scratching their heads on SPAC, the idea here is that we're writing, some people call them the blank check company, right? Yes. We're going to send $200 million to the Sagard team, to Adam Fileski, and he's going to look, they know all the fintechs all over the world. So they're going to look for something they can buy for, I imagine, the 200 million, right? Or do they add additional capital?
So the 200 million, so usually what the 200 million is like the seed capital to immediately finance the company. And what happens when they go public or the merger is complete, usually there's what's called a PIPE, private investment in public equity. And then you have the warrant holders can cash in. And so it could be $1 billion acquisition or $2 billion, but this is like the additional capital to fund the company because a company that would normally go public raises additional capital. So this helps replace that because you're not raising additional capital right from, yeah.
And we talk a lot about Portage and Diagram, but you also threw in a new word in there, Sagard.
Yeah.
Who is Sagard?
So as I said, Sagard is an alternative asset management platform for Power Corp. It has 7.6 billion AUM and 50 portfolio companies, including Portage Ventures. So I imagine most of those portfolio companies are through Portage. And what does alternative assets mean? It basically means it's all investments in non-liquid, non-public stocks, bonds, or cash. So anything that could be real estate, it could be royalty financing, it could be tokens, it could be
and this group of companies have had quite the year, right?
Yeah.
What are some of the things we've talked about and we've covered on this show just in the last 6 or 7 months?
Nesto, Wealthsimple, there's
Dialogue.
Yeah,
a lot of big wins. I think this is pretty exciting, and because they're doing the SPAC, anyone can buy into this, right?
Yeah, you buy into it, right? If you buy an IPO, you also get a warrant. So that means you're basically buying a share of at $10, if that's what the price ends up being, and you get an ability to buy another share for like $11.50.
So what do you think this SPAC is going to SPAC?
No clue. Look, if they're doing my general view on SPAC is the best companies don't SPAC. So they're good companies. They're not SPACing Stripe.
Who's been the best SPAC that you've seen so far?
Well, the best performing by returns is actually a company called Playboy. You may have heard of them if you're a bit older. They've actually shown an incredible return. But the other ones that have done well is Open Door, which is the original iBuyer, Portage.com, which is like a moving site. There's lots of autonomy in electric vehicles and like deep tech companies that have gone public, like Luminar Technologies, which helps, which is infrastructure for autonomous vehicles. So there's a lot of companies that have gone public via SPACs. Some like Open Door, Playboy, and Portage have done really well from returns. A lot of them just do are below the market.
Got it.
And then you have stuff like Lordstown, which looks like it was completely fake. Or sorry, not fake. That's don't sue me for saying that. It had numbers that they couldn't deliver against.
I mean, personally, no matter what you think of some of the integrity of these deals here, the names that are backing this particular SPAC are full of integrity and have done some amazing work in the community. So
I think it's a great SPAC to back. It's like one of the best credible SPACs out there. The question I always have with SPACs is, again, would Stripe go public via SPAC? Right.
The answer is no.
So usually what you're getting is a company that's just, could be a really well-performing company, but they've decided, and maybe it's a company that's moving earlier than they expected to move either, but it's not usually I'd say it's an A-, a B+, not the A+ companies.
So why does this matter if you're a TechTO member? Why do you care about watching and keeping tabs on this SPAC?
Well, so first of all, like we said, it feels like they're late to the game here. So it'd be interesting to see if they get it out.
Yeah, people said they were late to the game with robo-advisors and Wealthsimple too, right?
Yeah. I think there's another underlying thing here. Like, this sprawling interrelated entities sort of dominates the Canadian fintech scene, or wants to dominate it. I think it's good because it provides some confidence capital out there and confidence in the fintech sector. I think there's actually downside to the ecosystem too, because it sort of stifles competition and funding for new startups. If, this Dialogue and Portage and everyone's going to back this, they're going to bring their advisors in, like, why would I go compete with that company? I think it's less true now than it was 24 months ago because the ecosystem is doing well. But my question is, how many companies don't get built in our ecosystem that, future unicorns never get their horn, like they're just stillborns. And then the flip side is, last part of the AlayaCare discussion, the SPAC may provide a good way for Canadian fintech to go public faster, right? Like, sensible. I don't know what their numbers are. I don't know what Corey's doing right now. Maybe he was thinking 36 months from now going public, but this might be a good way to go public in 12 months. So if you're a post-A series fintech company and you want to get some liquidity, it might be worth talking to Adam.
Yeah, I was going to say, ask Alex for that introduction. He charges a very low finder's fee for the SPAC, which is great.
Nothing more than the investment bank would.
That's right. All the power of an investment bank in one person, Alex Q. Norman. And if you want to join to ping Alex for some intros to Portage, or maybe you're looking to hire, or maybe you're just looking to connect with other Canadian tech founders or entrepreneurs or investors to help grow your company, you got to check out the TechTO.org Insider Membership Program. Alex and I are there every single day answering questions, making connections, and just generally helping grow the community. Alex, who have you been helping recently in the Insider Program?
A woman named Mila Banerjee. She's the founder of Pronti AI, and she's about to raise. So we've been talking a lot about what the company does, how she can raise, some pretty cool, I'd call it e-commerce or retail tech.
Very cool. And there is a big market for that stuff, even here in Canada, right, Alex?
Yes, there is.
Amazing. And speaking of someone who might be seeing the Pronti AI pitch very soon, next up, Golden Ventures doubles down with 2 new funds. What's the news here, Alex?
So Toronto-based Golden Ventures, early stage VC fund, announced they had closed Fund 4 with $100 million in funding and an opportunity fund with $20 million of funding.
Got it. So tell us a little bit more about what those 2 funds are going to be focused on.
So the new fund, or the Fund 4, is going to be making what they call angel investments of $500,000 into roughly 20 companies, 1.5 million primary checks into another about 15 to 20 companies, maybe the same ones. And then the opportunity fund is going into their portfolio companies at a bit later stage with $2.5 million checks.
Got it. So that means that if you're already in the portfolio, you can come back to your favorite investors and look for more now.
Yeah. So let's be clear. So there's a couple of funds. Funds traditionally work with one. Funds probably usually have an entry point. Let's call a seed stage, and they usually have reserves to do one other round. So let's say the A round, and then you have the multi-stage funds, which is Sequoia, which can go from pre-seed to public. Or I don't know if they do public, but and then you have. What you're now seeing is a lot of funds have their core ones say, hey, our LPs, our investors want us to focus on this core area. So traditionally we couldn't continue the relationship with the B round, but now we create the opportunity funds to invest with another set of investors.
Typically a different set of LPs that are looking for later stage.
There's some overlap, but not a tons of overlap.
And who's the team behind Golden here?
So I guess I'll name the three partners, and the team's a bit bigger than this. You've got Matt Golden, who the fund's named after, Amit Shah, and Jamie Rosenblatt, who just got promoted to partner.
And those are names that I think a lot of people in the early stage Canadian ecosystem know. What role have these three played in sort of the development over the years of the ecosystem?
So Matt actually started off a lawyer, but we'll forgive him for that. He was co-founder with Alan Lau in a company before Wattpad. And then he was at let's call it the BlackBerry Fund. And then he merged and he started Golden Ventures in about 2010 to focus on mobile. So like he's been around this ecosystem for 20 years as a founder, as an investor, someone around it forever. Amit actually was an engineer at the company that Matt had started, but then went on to start was a co-founder of a video gaming company, and which sold and came back and partying. And Jamie is just being someone around the ecosystem a lot.
Got it. So this has been a good part of the ecosystem for the better part, if not more than a decade now. Now, Alex, a couple of weeks ago, we covered this announcement from the government of Ontario that they've just announced this massive VC fund of funds. So is any of that money going to end up in Golden's new funds?
Not publicly, so it could be, but yeah, I haven't heard it. Like I think they'll don't remember the LPs I saw, but like there was like Northleaf, which is a fund of funds, so that's some money indirectly through Vicky, which is a big federal program that in the last session, I think like in 2019, 2020. So yeah. There is some implicit government funding via fund of funds, but I don't think the Ontario government's here.
I want to see where that money ends up. I'm very curious. To the entrepreneurs that are listening and watching at home, whether they're in their Golden portfolio or not, how should they feel about these two new funds?
Right. More capital, better for the ecosystem. More capital to great partners and ecosystem supporters, even better. So, I don't know if you've interacted with Amit, Jamie, or Matt, or any of the other team members. This is a team that actually cares about the ecosystem, helps build the founders, good partners for founders. So it's great to have more capital. I think it's also a step up from the previous fund, so that they can write more checks, write bigger checks, which helps keep capital to be Canadian, from Canadian VCs. I don't know who their LPs are. So look, more money is just better.
I love it. More money is better. You heard it here first from Alex R. Norman. So what a week. What do you have anything else to add, Alex?
Yeah, I'll just say there's just one thing you have to think about is you have to always think about who your partner is and what their alignment is. Because I think the one thing is now they have a different alignment than before, because early on they were completely aligned with founders. You come in, we do your couple rounds, and then let's go get price in the market. Now the opportunity fund, who hypothetically has better information, can offer you a trade-off, usually get a better round done without checking market share, market validation. Not saying that there'll be less than market, but yet as funds go multi-stage, alignments might be misaligned at certain points.
Yeah, the founders might have to decide if they want to do a little extra work and go find some new friends, or no new friends. I hear you.
Sorry about that.
No, that was great. Thanks, Alex. What a week in Canadian tech. If you haven't already, you got to like and subscribe to TechTO wherever you're watching or listening, and we will see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.